In this video, we're going to talk about DIRT and how it affects your savings. DIRT stands for Deposit Interest Retention Tax. It is a tax on the interest earned on your savings in a bank, building society, credit union, or post office account. DIRT is important because it reduces the amount of interest you actually receive from your savings. Understanding DIRT helps you better manage your money and plan your savings effectively. Let's look at an example. Say you open a savings account that offered you 6% interest plus DIRT at 33%. In the first year, you saved €5,000. Because the account offers you 6% interest, this means that you earn €300 in interest. So your bank balance should look like it has €5,300 in it. Then the government comes along and wants a chunk of the interest you earned. The chunk they want is 33%. This tax is called DIRT, which is a tax on the interest you've earned. So now, out of that €300 you earned from interest, the government takes 33%, which leaves you with €201 now, and the government takes €99 of it in DIRT. The money collected from DIRT tax is paid to the Irish Revenue Commissioners, which is a tax collection agency in Ireland. Okay, now that we have a general gist of what DIRT is, let's look at a question, which is question 18 from the 2022 Junior Cycle Business Paper, where Kevin plans to save €8,000 this year. He researches two different options of places to save and found the following information. An Post offers him a saving rate of 3% with no DIRT, and a commercial bank offers him a savings rate of 4% with DIRT at 33%. So we were asked to calculate the interest he will receive for each option and calculate the total value of Kevin's savings after 1 year. So we're given a box for each option to calculate. It's important here to show your workings when you're asked a question such as this. We'll start with An Post. We'll begin with finding 3% of €8,000. You can use whatever method you have for finding percentages, but this is how I done it in school and it stuck with me. We get our €8,000 and multiply it by 3. So why 3? Because 3% is the savings rate which we were offered. So we need to find 3% of €8,000. This gives us €24,000, which we now must divide by 100, which leaves us with €240. I've highlighted this in green as this is our savings. We have no DIRT tax to calculate with An Post, so we can move on to adding our total savings, which is €8,000, which is our original amount, plus €240, which is our interest, which leaves us with €8,240 in total. So now we have our workings done. We can look at the two lower boxes, which ask us for our interest received, where we will put in €240, and our total savings, which we worked out, is €8,240. Now on to the commercial bank. This offers us a 4% saving rate with DIRT at 33%. Same thing again. Now we will find 4% of €8,000, which works out at €320 in interest. I'll highlight this in gold here because this is our interest pre-DIRT. Now we calculate the DIRT at 33%. We now take our interest pre-DIRT figure of €320, which is the interest we earned off our €8,000 in savings. Find out what 33% is of this, which works out at €105.60. I'll highlight this in red as this is the amount of DIRT we have to pay. Now we know how much interest we earned pre-DIRT, how much DIRT we must pay on this interest. Next, we have to take one away from the other. So you take your interest pre-DIRT figure of €320 and subtract your DIRT figure of €105.60, which leaves us with €214.40 in interest after we've paid our DIRT tax. I'll highlight this in green. Now we know our savings after DIRT is €214.40. We need to calculate to see how much in total savings we have. So we simply add €214.40 to our initial savings amount of €8,000, which leaves us with €8,214.40 in total savings. Now we input these amounts into our boxes below, and our interest received was €214.40, which was our interest after DIRT was taken out, and our total savings was €8,214.40. That's how you complete a question on DIRT. To have an overview of these two options, we can see that An Post offers a saving rate of 3% and the bank offers us 4% with a DIRT of 33%. At a glance, the bank might seem more appealing, but you know what DIRT means now, and it's very important. After the year, we'll earn more in interest in the post office because we didn't incur any tax on our interest.